Good afternoon, everybody. Welcome to today's TA live stream, Leading for Growth, How Brokers Make Money and Coach Teams to Win. We have two wonderful panelists joining us today who will introduce themselves further shortly. We just have a few housekeeping items to get through first. My name is Anthony. I'm the Senior Education Manager here at TIA, as well as the host for these live streams. So if this is your first one, we're happy to have you here. And if you're returning, we're happy to have you back. We appreciate all of everyone, viewing this for the first time as a recording. And first, we're going to get into the antitrust statement. Discussion, comments, and presentations during TIA functions must not refer to any past, present, or future rates, prices, or anything related thereto. Include any reference to marketing strategies, include any discussion of boycotts of any person, product, or firm, or inhibit any members' employees from discussing employment with other member companies. Additionally, things you hear during the meeting that are confidential and private to TIA should not be shared publicly without its prior consent or used against or in competition with TIA. Next up, we ask, for this to be as interactive as possible. We ask for you to submit your questions or any feedback or ideas that you have throughout the presentation. You can submit your comments wherever you see fit on LinkedIn or YouTube. And when you want to come back to review this recording, you will come back to the place that you are watching it now, the same location. And if you then think of a question following the recording, and when you're watching it, feel free to still comment and ask your question, and we will try to keep checking that and get you an answer as soon as possible. Additionally, if you have any questions about TIA or TIA education or any of the resources, the vast resources that TIA offers, I will be able to help you out and point you in the right direction. So any questions you might have there, feel free to submit them again in the comments section, and we will get to any questions from the audience later on in the Q&A portion of this event. With our housekeeping items out of the way now, I'm going to turn it over to our first panelist, Jim. Mr. Jim Kinney, if you could introduce yourself, please.
Hi, guys. Good to see you all again. I'm Jim Kinney. I'm actually with TIA Education, and that I've taught classes for TIA in sales, strategy, and major account or enterprise selling for the past 32 years. And so as a retired professor, I love programs like this that help the members. Anthony?
Thank you, Jim. Appreciate it. Mr. Alex Fritz, on to you.
Yeah, I'm Alex Fritz. I'm the CFO here at NT Logistics. Excited to be here today, especially with such an esteemed professor like Mr. Jim Kinney. So looking forward to the conversation.
Thank you, Alex. Appreciate it. Well, we will get right into it, everyone. And just to briefly introduce the topic today, so we will be talking about leadership in freight brokerage, which is how leaders connect, financial clarity, but also developing leaders and people and managing those of you working in a brokerage. Again, any comments and questions throughout the presentation today, please feel free to put them in the comments. But we are going to start with our first question to our panelists now. And that question is, when you look at a brokerage P&L, which revenue and margin drivers do you think leaders should truly focus on? And also, which numbers get more attention than they might deserve?
Yeah, I'll jump in with that one first. I'll kind of start with the latter question of what numbers get more attention than they deserve to start with. And I think that's a pretty simple answer. It's revenue. And I don't think that's just in our industry, just overall revenue numbers, right? If I have $1 trillion in revenue and I have $1,001,001,000 in expenses, that's kind of irrelevant, right? You're making net negative $1. Hey, Jim, have you ever asked ChatGPT what the revenues are for OpenAI?
I have not, but I can.
It's going to proudly tell you that they have 20 billion in ARR. What do you think happens if you ask how much net income do you make?
And the answer is going to be 0.
It's actually less than 0, and it doesn't really tell you. It's super vague, but that's because it makes no money, right? I mean, I say that to say companies that run on net losses year after year, I mean, they're probably not long for this world. So, revenue is cool, but your net income is a lot cooler, right? That's what you can actually take home at the end of the day. So I think that gets a little more attention than it really needs from a practical business standpoint. For what to focus on, I think that's really dependent on your business. Within the kind of 3PL brokerage space, there's different focuses, right? There's spot freight focus, there's managed trans focus, etc. And I think that's going to really kind of point you to what you're focusing on, what your KPIs are. And in spot freight, it's a lot more transactional, right? So you're looking at the transaction level probably a lot more closely than you would in a managed trans. Not that you wouldn't look at the transaction level, but it's a lot longer term contractual business at that point, right? So you're looking at longer term. In my opinion, in the latter there, the managed trans, you're probably also looking at some KPIs of how your customer is doing, simply because the better you do, the better they do, and vice versa. What is their cost per pound year over year, decreases, increases, whatever? How can you mitigate that? Because at the end of the day, a successful customer is a successful business for you. So all of that matters. So that's kind of my opinion on that one. Jim, what do you have to add there?
Just one quick sentence. Excellent answer. Just work from the bottom up, right? Alex, we just talked about that net income. Okay. Before that, where were your transaction costs? Before that, what did you pay the carrier? Okay. Then you get to revenue. So you build up to revenue. So when you look at a P&L, it strips down to net income. But to run a really profitable business, the one thing you put right there is you got to know the KPIs in those key areas. What are your sales costs? What are your technology costs? Okay. Those buckets are tied to your operation. That's the difference between profitability. Trillion versus $1.1 trillion in overhead. You got a negative dollar loss. That's the difference to profitability right there. Alex, when we get to the next question, so we have examples and things.
Yeah.
I'm curious. Okay, do you find that in T and when you go and speak at conferences that people think in terms of buckets that way from the bottom up?
I mean, in some I think do. I think some don't, and I think that's I think part of what we're talking about here and part of what the TIA provides is some of that education to kind of think a different way. And I think there's some cool opportunities coming up from an education standpoint through the TIA that will help kind of reshape that thinking, Jim.
Okay. Anthony,
back to you.
Jim, thanks, Alex. Appreciate that. We got another loaded question coming up here. Where do you see margin quietly leaking away in a typical brokerage operation? And what are one or two concrete actions that leaders can take to close those gaps?
We're going to let the CFO go first again on this one.
Hey, Jim, I caught that before you started saying Chris. I know that's.
Well, I'm addressing Chris. I'm sorry.
All right. So to answer your question, where do you see margin quietly leaking? In my opinion, I think if you don't understand the full makeup of the probable charges on a load, what you expect to make from a margin standpoint could easily end up a lot lower based on the real life implications of what we all work through, right? So, just to work through an example of that, just throwing out round numbers so everyone can do the math in their head. If you're expecting a 10% margin on $1,000 load, it's $100, right? Let's say you're going to a grocery retailer. It's a $200 for a lumper or whatever it's going to be, right? Let's say there's detention there. You've got another couple $100. So at the end of the day, let's say you're $400 higher on your total charges than you were before. You're at $1,400 now when you expected 1,000. So your 10% margin that you thought is now down to 7%. So I think it all comes back to knowing your cost to serve, both internally and then, Jim, I can't see anymore. Did you drop off? There you are. Okay. Hey, wouldn't you think some of that expected additional charges, the accessorial charges that we all encounter, wouldn't you think that would be important for your customers to know for pricing decisions as well?
It's everything. So we're going to have questions on coaching later, and I've got an example. But just a quick answer to that is, okay, you have to understand the total cost of the trade. And often people just stop at the truck, and there's so many other things. Okay.
Yeah.
And so never mind the cost of capital. I mean, it's just amazing. So we'll keep it simple. Okay. There's more than just that $100. Okay.
Right.
And the profitability, all of a sudden that 10% looking like 7, you cannot be profitable at that number. It's amazing what 3% will do. The devastation to a P&L is overwhelming. Right, Alex?
Right. I mean, I would say, I mean, those types of charges are generally repeated, right? So if you know there's a $200 lumper at this particular receiver and you go there often, you can pretty well expect it's going to continue to happen. Same thing with detention. There's patterns there. So is it seasonal where you see some of this stuff in December because nobody wants to be on the dock or something like that? Can you, like, how do you use that data to price that in so you can make some better decisions there? I think those are some opportunities to close some of the gaps, to answer that question, both internally, for your own business as well as for your customers, because they're making price decisions based on that as well. So, anyways, Anthony, back to you again.
Thanks, Alex. Thanks, Jim. Just a reminder, everyone attending today, any questions, any comments, we'd love to see them. Moving on to the next question here. What is one common misconception your teams have had about what makes a load profitable, and how did you correct that understanding?
Yeah, I think the most common misconception, at least from some of the more frontline folks who are talking to the carriers, who are the account reps, et cetera, is that gross margin equals net margin, right? Jim kind of alluded to this, that there is so much more than just what you bill your customer and what you pay your carrier, right? The salary, overhead, overall rent, the technology, all of the cool bells and whistles that we all like these days, the AI stuff, your TMS, et cetera, on down to if your company has debt, I mean, that costs money to service. So all of that needs to factor in. If those folks don't have any sort of idea of what a true transaction cost is for your business, that's going to be a challenge. So, knowing that and setting expectations of what you need to overcome, I think is important. I saw an article, Jim, I bet you saw this too. It was in the Wall Street Journal, I don't know, a month or so back, where a large broker in our space was utilizing technology to decrease transaction cost, right? I think that's probably going to be critical for everyone moving forward, is embrace that technology so your people can be more effective with what you have today, because it's just going to get more and more competitive as we go. It's critical. Jim, what are your thoughts on that?
Alex, looks like Jim might have hopped off for a second. We'll work on getting him back.
You left me hanging.
I'm sure he'll be back in just a second here.
Well, let's pivot, Anthony. What are your thoughts on that?
That it's hard for me to expand on that, Alex, but I mean, have you, in terms of relating this back to the broader TIA membership, how would you say these have, this kind of aspect has evolved over the years about, focusing on this, these misconceptions and how we can improve them?
Yeah, I mean, I think that's always kind of deceiving, because the frontline folks always see what the gross margin is, right? Because that's a lot of ways how they're incentivized is that gross margin, and the rest of it is almost not their responsibility to manage. But I think if they know it and they know what they're overcoming, it probably helps kind of bridge that gap there. But I think we might have a question or a comment there. Lumber fees don't always work the same. Depends on the load. If it's down, stacked, and floor. You're right. I mean, there's a lot of different ways that stuff that is charged. Probably a stupid example that I gave, but anyways, just giving an example of how margin can dilute there based on some of the implications that come through.
Thanks, Carlos, for your questions, and everyone else. We appreciate that.
I'll take that question and try to answer it best I can. So how do you increase margins when until we can get Jim left me hanging. You know what he's doing, Anthony? He's probably taking those fishing gloves out and getting ready for your first net. Anyways, how do you increase margins when operating in a hyper competitive environment? Sounds all good, but so easy to start a trucking company or brokerage plus fraud should industry regulate again. For the first part of that, I'm probably more qualified to answer that one. How do you increase margins when operating in a hyper competitive environment? I think, like I kind of mentioned, technology is going to be critical as we move forward. So technology is going to allow, at least in my opinion, by my estimation, and there's obviously a cost to this technology. It's going to allow you to decrease that transaction cost, just like that Wall Street Journal article I mentioned said that they were able to accomplish. If you're able to make your employees 2, 3, 4x more scalable than they are today based on technology, that's going to be a win. And not everybody in this industry, I think, is going to be able to or will embrace that technology. So it'll give you a competitive advantage from that aspect. Thanks for that question, Scott.
Perfect. Yep. Thank you, Scott, for your question there. We're still working on getting Jim back. In the meantime, Alex, do you have any other thoughts on, the main segment here about how brokers are, traditionally making money and, focusing on that and trying to not lose sight of what is the most important, about, where margin is won versus quietly lost? Any other thoughts there before we shift?
Yeah. I mean, I think another example is your DSO. So like, is your customer paying you in 45 days? You pay your carrier in 30 or less. Whatever that gap might be that you genuinely need to cover. So obviously, in those instances, you need the cash to bridge that. If you're relying on debt, that has a cost. So that's margin, squeaking out the door there. There's some tools these days, I think, that a lot of folks in the industry utilize. Factoring is obviously very prevalent. But again, factoring is a cost. So that's margin you're giving up when you're kind of bridging those terms. So, the thought there is evaluate your customers from the beginning, and kind of understand what the expectation is from your payment standpoint, to price it in from the beginning, right? So like if it's going to be a 60-day customer and it's going to cost me X to bridge that 30-day gap between being paid and paying, it's just a delta that you can run the numbers on and kind of work backwards. So just another thought that I see. Anyways, did Jim just completely bail on me?
I messaged him, Alex. Still haven't heard back, and we'll, stay tuned there for Jim getting back here in a second. I'm sure he's working on it.
That is hilarious. It's so Jim gave me an A+ for an answer earlier. That's my first A+ from a professor ever. I think he took that as his job was done and he just bailed on us.
And while Jim is getting back on, Alex, if we're shifting into the coaching aspect of, coaching a team to win, focusing on all these moving parts, and not losing sight of what is most important, which is staying in business, but also, adhering to the, core business values of your brokerage. How has coaching with all of these different aspects in a brokerage, evolved with, you've mentioned tech, you've mentioned different, newer aspects of the industry popping up and changing things. How do you think coaching, to, solidify what is the most important has evolved over the years?
Yeah. I mean, I don't know that, the concept of coaching versus just telling, I don't know that that's changed. I mean, right. From a training perspective, you're just kind of transferring knowledge, right? Coaching is a little bit different where you're trying to develop decision-making, develop folks. So I think that remains, right. With whatever new challenges, new technologies, new whatever comes down the line here. But I mean, you're not just telling what good looks like. You're telling them how to. You're teaching them to fish, right? To keep with Jim's favorite hobby. Uh, so as technology comes, I think just helping folks understand how that's going to benefit them. If an individual is 2 or 3 times more uh, effective than they were before because of some of the technology, it's not, oh no, AI is going to take my job. It's, hey, maybe there's a 2 or 3x opportunity for me here instead. So we're just being, it's a lot like we saw. I mean, I wasn't in the working force in large scale back then, but in the 90s, when computers and the internet all kind of came online, right? A lot of people were concerned that, like, oh no, the internet's going to disrupt everything we're doing, and all it did was make people more effective. So I think some of the cool stuff that we're seeing today is going to largely do the same. It's going to make us more effective. It's going to create new jobs. Some of the more antiquated jobs are going to go away, but new ones come in their place, and it's all going to be just great anyways. So anyways, I hope that answers your question.
Thanks, Alex. Appreciate that. It looks like we did just get a question from the audience about technology. This user asked, you spoke of scale with technology. Any advice on combining evolving tech with current, previous roles?
Yeah. That's a great question. I think the key for success there, and I am completely going off the cuff, guys. All of my prepared stuff has been burnt through because Jim left. So sorry. This is awesome. Anyways, I think if you've got a champion within your building that will learn it, will embrace it, and they can teach that and coach others through that, I think that allows for the success of whatever that initiative is substantially better than if you just send out an email and say, hey, we got this cool new AI thing. You're going to all use it. Have fun, right? Like, somebody needs to understand it and how that benefits, and work through why it's good for your people, not just here's what it is, here's what it does, right? I think looking at it from that kind of coaching lens is beneficial in that regard, to intertwine with whatever your current operation looks like today. We had a number of folks when we started utilizing some new technologies that said, hey man, that sounds like that might disrupt my day-to-day job. We said, great, yes, let's talk about that, but here's how it makes you better. And then inevitably they came on board and works well. So
thank you, Alex. And thank you for these great questions from the audience. There's been some great interaction there, everyone. Looks like Alex said his internet is down, so I'm not sure if he's going to be able to join back, but we will stay tuned there while we still go through some of these coaching topics here.
To tell Jim this is on LinkedIn, and LinkedIn can be accessed via cell phone.
Hopefully, oh, perfect. He must have heard that. Alex. Looks like there he is. Hey, Jim, good to have you back.
Just bailed
Guys,
on me,
we're
man.
in Oklahoma. I have no idea what happened to my internet. So I'm got using the phone as a hotspot. My apologies.
No problem, Jim. Appreciate you joining back. We did just, start shifting into the coaching topic here. And we had some questions from the audience. Alex, do we want to recap Jim on anything here before we move on, or should we just get back into the questions?
Jim, I'm just winging it at this point. So let's go to the questions.
Let's just go to the questions.
Perfect. So on to the coaching topic and diving in there a little bit more about coaching for results. In your day-to-day work, how do you distinguish between training a rep and coaching a rep? And what does that look like in a real life conversation?
Actually, it's a simple matter of semantics. Training is learning how to do a skill specifically well. Alex didn't pop out of his University of Texas Tech to just become a CFO. He learned a skill set. Okay, you continue to add to that skill set. So that's training. And then coaching is, all right, how do I apply that and take the next level? And usually that comes from somebody above teaching you and influencing you. So sales, operations, anything, okay, we train them the basics, how to use the software, how to interload, how to track and trace that load, selling, how to open the sales call, how to handle objections. But the coaching is when they come to you with a more advanced problem, it's like, well, I didn't expect this objection, or I didn't expect that we wouldn't get full payment. So Alex has got somebody in AR comes to him and says, you know, the bill is $3,912. They sent $2,500. What do I do? Well, she knows the accounting, the AR person, the AP people, they know how to interload, but what do I do now? So the difference is, how do we advance the skill set, which comes from training, that comes from coaching. So the simple thing is, okay, how do we do something, and then why, and how do we get better at it? That's the summary answer for that question. Alex, anything else?
I think I answered the question while you were fishing or something. Now, I said largely the same thing, Jim. You know, the difference there is you're not just telling somebody how to do something, you're telling them why this is the way it is, why we do what we do. So that's, in my opinion, the difference between, you know, training and coaching. So
Right.
Agreed.
So, okay. Next question then.
Thank you. On to the next question. Can you walk us through a recent example where you used financial context, like margin or cost per load, to coach a rep through a pricing or carrier decision?
Okay. So, ladies and gentlemen, I did not write that question and send it to Anthony for him to ask it. But when I read it, when he sent them out to us yesterday, and I printed again this morning, I rolled on the floor laughing. So everybody grab your pen, okay? On January the 7th, I got 14 emails that day, all with the same link, okay? It was to a FreightWave articles. I do not know this woman. Her name's Julie Vandekamp, okay? She wrote an article that I just recently talked about, the same subject at a TI seminar in December, okay, which is basically the cost. And this article gets to how we take what Alex does as a CFO, what I do in the coaching side. And I'd like to make a couple of quick comments about my note from December at the TIA enterprise sales class versus what she had. And basically, it comes down to something like this. Okay? The disconnect isn't in the demand, okay? It's in the economics. Okay. So if you're going to be a really good salesperson or a sales manager, okay, and you're coaching that team, you had better explain the economics of a transaction to your team. Now, while my numbers don't match with what Ms. Vandekamp had in her article, I am going to tell you she pretty well hit a home run in terms of the concept. So when you guys go to read it, she uses a $30 million brokerage, and she talks about the labor cost being $150 a load, the expenses being $55. So you have a transaction cost of $205. Okay. So if you're making $195 or $189, so what she uses in gross margin, you're negative 16. That goes back to what Alex and I were talking about a few minutes ago. So if you're going to be coaching, a couple of quick notes here. Number one, okay, your team should understand not just the gross margin. Okay, it's great if you just, yeah, we're clocking $243 a load. Wonderful. Okay, but if you're at 205, okay, then they see the reality of how pricing works. Okay, so you can't take freight at $180 if you have $205 in overhead. It's not just the truck. Okay, it's the whole cost of moving the load. And in this particular case, when you're coaching, what you're going to find is, and it's happened several times in the past 3 years, is this chaos of logistics going in, where you have spot freight or that pays less than contract freight. So you can imagine how that turns the economics of it. So from a coaching perspective, actually a little broader than your question, Alex, but this is that important, okay? If your team doesn't understand, okay, here are my unit costs, okay? Here's what it costs for the truck, okay? Here's what it costs, okay, to move the load, okay? And that load breaks down into two major expenses, okay? Labor and technology, Okay, so if you look at what firms spend, and you look at that bucket, it's not uncommon to find firms have overhead of between $7,000 to $25,000, smaller brokerages, a month in technology costs. All that's assigned to the transaction itself. So from a coaching perspective, when you're working with a sales team, especially an enterprise sales team, you have to know what those costs are. Don't hide them. So the best firms are very good about saying, guys, here are what our bucket costs are. Here's what a trade costs. From billing to collection, they point out, why AR, they have digital reports to say, here's why it's got to be under 30 days, under 60, 190. So the cash flow, there's the entire thing. And you say, well, what's your statement of cash flow look like? Well, we don't do one. So your accountant, in your $18 million, $30 million brokerage doesn't give you a statement of cash flow every month, and you're not. Those are the kinds of things. And Alex, you can take it from here because as a CFO, I'm certain. But how critical are the team, the guys moving the freight, knowing, because that impacts pricing and thinking and whether you should even be pursuing that account. So Alex, I'll hand that one off to you.
Yeah, I mean, I agree with everything you said. It's, I mean, from a coaching example of how do you kind of instill the financial aspect of a bigger picture, like you're mentioning there, just instead of here's what we think it's going to cost, here's X% on top of it. It's, what other way can we think about this? Can you build a carrier base out that could beat that in, like, how do you, all of that stuff, volume commitments, whatever it might be. I think it's more than just here's a process, follow it. It's think about how overall does this work together to kind of get to the end goal that you're looking for there. So.
Okay. So, Anthony.
Thank you. Next question. What practices help you hold representatives accountable for outcomes without slipping into micromanagement, especially as your team grows and scales?
Alex, if you don't mind, I'll take this one first. For a long time in marketing, we always tell people, know the 10 or 12 key equations in marketing and in sales. Same thing with finance, the cost of capital, AR, AP, how cash flow works, all those things. So in coaching, one of the things that really matters without getting into micromanaging is what we call the efficiency and effectiveness network. So we talk about exposures equal to reach times frequency, and then you look at the efficiency and effectiveness, all those activities. So sales rep A makes 50 calls a day. That's how efficient he or she is. Their quote rate is 10%. So for every 50 people they talk to, they get a chance to quote something. So that's 5 potential quotes, right? So all right, that's pretty good. But you have to have metrics within your firm. So sales rep B only gets 40 calls a day in, but her effectiveness ratio is 25%. That's a big difference. So in the first one, we've got that 5 quotes, and the second one, we've got 10. So which rep do we want, A or B? Well, if you look only at the production or the effort, the efficiency, on paper that 50 is greater than 40. You look at the effectiveness, 25 is certainly better than 10, and henceforth the real number, which is at the bottom, just like net income, is I will take 10 quotes out of rep B and rep A. Those 10 quotes, assuming that we can work them out, are going to lead to more freight. So whenever we look at anything, there's always a vital behavior, but there's got to be a minimum level of effort or productivity. Somebody says, oh, I'm really good with my calls or this or that. There still has to be a dashboard, that's live and action always coming up, which says, all right, what is your efficiency number in any task? Okay, what's that vital behavior? What's the effectiveness number? Am I doing the right things to get that? Okay, and that's the one thing to get away from micromanaging. Okay, don't look at the input variables, the number of phone calls. Okay, look at the output variables. Start with something as simple as, okay, number of carriers you contact, number of loads booked, number of, okay, shippers you contact, number of loads quoted. Okay, look at that output. Okay, quotes, they get you loads. Loads become lanes. Lanes become multiple lanes. Okay, so if there's anything that will get you away, and I realize that was a bit of an academic treatise on that, but if this is a really important theory to understand. Okay, focus on outputs, not inputs, because if you focus on measuring, okay, quotes instead of calls, if you focus on loads booked, okay, per employee, then you're focusing on production, and that drives effectiveness of your entire business. So coach towards, okay, those things and not towards the activity. And that's a big, there's a bunch of stuff written on it, and it's really modeled my behavior. And I look at somebody, okay, don't tell me you made 73 calls a day. I'm not interested in that. Okay, your goal was, did you get 7 quotes today? And that's really a tremendous change from getting away from the micromanaging, Alex. Do you have any thoughts on that at all?
Yeah. So this largely repeats what you said in not a professor's view. Sorry. This is so I mean, like, I think you figure out what's the expected or desired outcome. What does it take to get there? And then you hold whoever it is accountable to it, whether that be dashboards, like you said. So, you know, that's awesome. Can you gamify it? Can you make it fun? Make your expected outcome fun to achieve. That type of stuff I think is super effective. And it avoids the micromanagement of it because everyone does it themselves. So yeah, I mean, everything you said, but that's largely what I'm just regurgitating here in much less words.
So back to you then, Anthony.
Thanks, Jim and Alex. That wraps up our questions. I'm just going to send a shout out as a reminder. Please send in any questions or comments or any feedback that you've saved for this Q&A portion of the webinar today. We've already had some great questions, so please feel free to keep them coming. Jim and Alex, while we wait for any questions from the audience, are there any aspects on here that you want to touch back on, or is there anything that you mentioned a recent article or anything that is has popped up in a related topic to some of these things we've discussed today recently?
So
Alex, if I could go first, 2 things. One, everybody should go read the FreightWaves article. Your numbers will be different. There are no way you can compare to her example, but the example is beautiful. Take it out and plug to it. And number 2, when we talk about coaching, vital behaviors, this is phenomenal research that I have taken. See, in academics, okay, everybody else, if they take it, it's called plagiarism, as long as you tell where you got it. So, okay, in the late, probably 1980s, when Neil Rackham started to develop spin selling, and we saw the changes of behaviors, which led to operations and other things. Okay? Every job has tasks assigned to do it, to complete it, all right? So the more you focus on the vital task, the more likely you're going to be successful, okay? So I'm going to use sales as an example here, okay? There's 6 steps: pre-call planning, sales call opening, needs assessment, solution development, closing, and follow-up. Of those 6 tasks, the vital behavior is step 3, okay? Needs assessment. Okay? So the better the quality of your questions, okay, predict the greater the likelihood of a longer sales call and the greater opportunity to get a quote. So everything that we've talked about today is the number helps drive the quality of the coaching, and that sort of summarizes the discussion. And unless you're making new calls and you've got sales managers who don't have limited production, okay, goals of the number of quotes they want from their team a week, they're not going to grow. If you got an operations team that's not focused on hitting a metric number that's been set by somebody like Alex, you're just not going to be as profitable. So that really sort of sums up how you take financial numbers and bury them into the vital behaviors of what your team does, whether it be sales or operations. Back to you then, Alex, for your turn to sum up.
I have two comments. One, Jim, I think you lost internet because Okie State was using all the bandwidth to steal more UNT players. Two, I think a lot of the topics that we're discussing here, that I briefly mentioned this earlier, there's some cool education opportunities coming up with the TIA. There's some leadership academy stuff working down the chain. So when you see some links, et cetera, to register for that, check that out. We'll get a lot deeper into a lot of these topics. That's what I got.
Okay. Hey, real quick, I just got a text from your boss, Chris Todd, who's the president of NT Logistics. He said, I sabotaged your internet in rural Oklahoma because I needed my guy to look good. Is that correct?
Yes, probably.
That's great.
I
And so
made
we
that
did
up.
have
It sure sounds good. Sounds like Chris, Alex. So, do we have any questions at all?
Yeah, it looks like we did have
Any follow-up?
we did have one question come in, Jim. So Scott asks, coaching ideas are great with current customers, but what's your approach to getting new customers to quote?
So work backwards, okay? So we talked about taking the P&L from net income and going up, and you know how Alex gave that great example on the load that pays $1,000. You think you got $100 at 10%, and then all of a sudden those other things. So look at your freight. So the first thing is look at your freight backwards. Okay, where are you doing really well? Where are you profitable? What's good? And then mirror those. Okay. And then you go to some source. Okay, we'll use, I won't drop any names here, but you know, some lead source. Okay, and then you take that target market, and you work towards going to those lanes, those commodities, those regions, and then that really, okay, is what drives it. So let's say that you're back to this gentleman's question. Okay, you're really good. Okay. With produce in these markets, then you know what? Are you a member of the California Strawberry Growers Association? Are you a member of the Florida Strawberry Growers Association? Are you a member of the National Watermelon Association? So those target markets already exist where you're good. So if you're great at frozen foods, there's a national frozen food specialty co-op. Finding the leads is not nearly as challenging as when I sit down with somebody and say, all right, lay me out your top 3 customer profiles. And they go, well, what do you mean? Then that's a red flag. So work from the bottom out of your P&L, right, Alex, into that. And so Alex as a CFO can address that more specifically, but I'm assuming that's your mindset, is it not? Where does my profit come from? Right, Alex?
Yep, that's exactly right. I think you summarized that well. I know we're running out of time. We got one more question here. How to teach broker teams that booking loads in advance not only protects margin and saves operational costs as well. Candace, what I would do is I would show an example of one or examples of one and then the other, so they can see the difference very clearly. If booking in advance is increasing margin, whatever, then explain that to them. Show the hard numbers, right? If the alternative is doing the opposite of what you want, show exactly that, and I think that should drive behavior. Holding people accountable to numbers generally will result in the outcomes that you want. So, if you put some goals or whatever, like I need this booked 2 days in advance or whatever it is that you're looking for, holding folks to that will drive that behavior.
Thank you, Alex, and thank you, Candace and Scott, for your questions there. With that, I believe we are ready to wrap things up. Thank you again, everyone, for your attendance today. And make sure you check back here for the replay and the recording. Alex and Jim, do you want to leave anything with us before we sign off today?
I got my final remarks in, and again, I apologize for losing internet connection. It's just one of the joys of modern society.
Nothing other than thank you for joining. It's been awesome.
Perfect. Thank you, everyone. Thank you, Alex and Jim, and we will see you on the next live stream, everyone. Make sure you check out tianet.org for more information. Thanks, everyone. Take care. Thanks,
Bye.
Alex. Thanks, Jim.